I don't think that the lenders ever took their foot off the accelerator when it came to the mortgage wars, but I do think they might be pressing a little bit harder as the months unroll.
One of the big four banks is now offering a home loan fixed rate at under 5%. Are the other big banks likely to follow?
I do think that they'll follow over time. I think they'll follow kicking and screaming. It's taken them a long time to get here. Back in April, we saw the first fixed rate under 5%. There are now 27 different lenders offering at least one fixed rate under 5%. This now includes Westpac, but it's taken a number of months to get there.
Well, markets have adjusted their rate cut expectations, pricing in the likelihood of 2 rather than 3 more cuts before the middle of next year. They're not always right, of course, but can they provide a bit of a clue for borrowers about where interest rates are likely to settle?
Oh, they absolutely can provide some guidance, provided that if you as a consumer are deciding between fixed and variable, know that this might not come to fruition. There are a lot of different variables in this equation, so you really do need access to a crystal ball in order to get it right without the benefit of hindsight. But you've got to think about how many variable rates cuts there's likely to be in the fixed rate term you're looking at, but then also the likelihood that the banks will pass on those cash rate cuts to variable borrowers. That's another big unknown.
We saw some statistics at the end of last week showing credit growth is on the way up. Does that provide further evidence that economic conditions right now aren't overly restrictive and that the Reserve Bank may be considering whether it is in fact quite close to that neutral rate?
Yeah, that's another big question about where the neutral rate might lie, and it was very clear from the RBA's minutes from the last week, but also from the Governor's press conference after the last rate cut decision, that they do not know where that neutral cash rate could be. And look, if you look at the big four bank economic forecast, you've got CBA and ANZ, they're still saying they only expect one more cut at this point in time. So that could be a reality. It could be that the neutral cash rate isn't that far off.
What sense do you get, Sally, about whether the mortgage wars are about to heat up once more?
Well, I don't think that the lenders ever took their foot off the accelerator when it came to the mortgage wars, but I do think they might be pressing a little bit harder as the months unroll. Certainly, the lowest rate in our database, 4.89%, that came on board last week. We didn't expect a lender to drop their rates that low after the August cash rate cut. There's plenty of conditions that come with that loan, but it does put a flag in the ground about how low it can go. But also, banks are looking at other ways to tempt new business. For example, CBA today, it launched frequent flyer points, Qantas frequent flyer points, attached to its Digi home loan. That's a digital-only one. You can't get it through a broker. Comes with a lowest rate of 5.34%. And if you're borrowing up over $1 million, you get 300,000 Qantas points thrown in. But of course, you really need to do the numbers, because what we find so often is those upfront cash sweeteners. They're sometimes good in the first instance, but if you keep the loan for a number of years, particularly on big loans, that upfront sweetener, the sugar hit, it wears off and you end up with a higher rate loan. So explore your options. It is so important.
Sally Tindall, thank you.
Thank you.